Yo, this is your boy, it's FX. Back with another video. It's alright, took too long to post something, but I was busy with some other things the past few months. So, we're gonna be analyzing GBPUSD. We're gonna be analyzing GBPUSD. So, what you can do, you can just take your phone to landscape mode, and then, as you know, your boy, we do top-down analysis the FX market heist way. We do top-down analysis the FX market heist way, but now we've integrated some SMC into it. Actually, that's what I was busy with the past few months, trying to integrate my strategy with the SMC in a way that is still gonna work more efficiently than the FX market heist top-down analysis. So now, looking at the chart, as you know, like previously, we're starting from a higher time frame. Now I'm on a monthly time frame, and then we're gonna go down up until we know where to enter, or we actually get an anticipation for the coming week that we're going to. So today is a Sunday. I'm analyzing, or what I'm analyzing would be like for the whole week. So I'm actually gonna try to predict how the market is gonna be going throughout the week, and then I'm actually gonna just be executing where I have, or where I see some, yeah. Okay, so from here we actually like first have to identify where the market is going. So the overall direction of the market, or the market bias, as some might call it. So looking at this, or looking at our structure, what I see is that we have a high, low, a high, and a low, high, low, high, low, high, anticipating another low. So this is what's happening. You can clearly see that we are on a downtrend. So the market is giving us downward moves. So we are on a downtrend, so the overall bias is bearish. But one other thing that we have to be looking for, or what we have to be checking, is at the moment, are we looking for buyers, or are we looking for buys, or are we looking for sells? So that's what we're gonna dive deep into. So since I know that my overall direction from a higher time frame is a sell, I come to my monthly, or I just highlight my monthly high and my monthly low. So my monthly high will be somewhere around here, and my monthly low somewhere around here. So this is my monthly high and my monthly low. And as we know that for the market, or in every trend of every market, we'll be having highs and lows. So since now we're on a downtrend, we're having lower highs and lower lows. And before the market actually turns, it usually gives us something, or some sort of like an equal low, before actually breaking above, retesting, and actually like going up. So this is what actually happens before the market like goes to the different direction. So checking at this one, or looking at this one, even if the market was gonna turn, or even if the market was done with the selling momentum, or it's close to changing direction to go for an uptrend, we're still very far from the bottom for the market to like actually get enough momentum to push further up. We are still high above, meaning that we still have room for sales, and of which that's what we're looking for. You actually want to trade sells or buys when you can clearly see that you still have rooms or room for those kind of positions. So this is what I was talking about. Even if the market was down with the selling pressure, but still, for now, we are still very far, or we still have a lot of room for the market to sell before it can actually like go back up. So yeah, this is what I was meaning that time. So now we know that okay, we still have a lot of room for sales, and we are on a downtrend. So meaning that we have two signals for selling momentum. We have two signals for selling momentum. Another thing that you can use as confluence is to check on the previous data. So for every time that the market was bullish, it consisted of like white and red candlesticks, meaning that it was a retracement. So it wasn't uh, as volatile as when it was going down. For every downward move, as you can see, like it's a lot of like red candles in a row, meaning that the market's overall direction is a sell. So now coming down here, we're gonna have to mark also this level. As I can see, the market respected it also here. The market respected it also there. So now going down to our weekly time frame, we just need to identify our weekly high and our weekly low. So actually our weekly low is this intermediate trend, or is this intermediate level that we just put there, and our weekly high is that one that we put as our monthly high. So from here you can just check what the market was giving us before actually going down. So as we can see, not a lot of things on the weekly time frame. Let's just go down to a daily time frame. So on the daily time frame, we can see that the market actually gave us a change of character here. The market actually gave us a change of character right there. Leaving that to be now our R. So after the market gave us a change of character, we're no longer looking at the previous data. We're looking at the most current data. If you remember the top-down analysis from FX Market Heist, we usually concentrate on the most recent data. We use previous data for confluence, but we actually concentrate on analyzing the most recent data. So now, if you can check properly, we the change of character, and I would want to call this another form of I would want to call what happened here another form of break and reverse, but I don't want to like overcomplicate things, so we have to be as simple as we can. So okay, the current trend that we're on, retest, break, we have a double top here. I'm anticipating, or I'm thinking that the market is actually going further down. I'm actually thinking the market is going further down. This is still on the daily time frame. I don't know if the market is actually going to reverse right from here going down, or it's just playing around. But another thing This is what I'm anticipating. So now, okay, let me just this another R. And then here we had our break. Break of structure. But again, if I look properly, we have another R over here and another break of structure right over here. We just want to analyze, or you just want to like cater for the most recent price. You just want to cater for the most recent price. So this is our low currently. It hasn't been broken, so we can call it a break of structure, or we can just call it a low. Until it is broken, that's when we can call it a low, and until the market has broken above our area, that's when we can call it a change of character. So now this is still an internal trend, it hasn't decided or hasn't given us signals for a change of character or a shift in market structure or a continuation or on the original market structure that we have. So looking at this or analyzing this now from the daily time frame, I can see that we have a strong level here. We have a strong level here. Yeah, we have a strong level here, but let me make it faint because we're still on a very high time frame. Let me make it faint. Okay, yeah, we have a strong level there. That's why it gave us that double top or those reversals there, because besides being our supply zone, it's also an order block. And whether you're using SMC or just normal technical analysis, you know that our levels on a higher time frame are way stronger than those on a lower time frame. So now what we're gonna be analyzing, or where we're gonna be analyzing, is actually inside here, because if you can remember, or if you can check the previous videos that I've uploaded, FX market heist, we only analyze, or we usually analyze most current price. We have to analyze the most current price. So we're gonna go down to a smaller time frame. For our time frame to check what the market was giving us, or what the market is giving us. Okay, so I see an uptrend which was interrupted by the market open on Monday. Yeah, this was the market open on Monday last week. So this is what actually interrupted this beautiful uptrend. But as you can see, we haven't broken above that R, so meaning that we are still anticipating for selling moves or for downward pressure. We are still anticipating for downward pressure. So looking at this, I'll just use my path to like actually okay, so we already started going on the downward side. What I'm looking for is the market to actually like break below this level somewhere there, come up, even if it doesn't go all the way up until there, but just to confirm that that small retracement upward movement, it's actually done. It can give us the sell breaking lower or breaking our low and going further down. So now, since I already made that path and already know what I'm anticipating or what I'm like waiting for, I'm just gonna do this. So this here was a break. This here was a break. As a break of structure. This is our high. Since we're now going up, or this small intermediate trend, or this small trend inside our overall trend is going up, we're not gonna use the low, we're gonna use the high. So now our R is now below here. This is where I'm actually anticipating the market to come and cross. That's where I'm anticipating the market to come and cross. So I don't wanna like analyze a lot of things. I don't wanna analyze a lot of things because I know I'm gonna be analyzing a lot when we go like even further like down. I know I'm gonna be analyzing a lot before we go even further down. So you know that inside every trend that you might have, you still have more trends. So that's why we have the term trends in trends. So now, since we are still on a higher time frame and using our path, we had this move, which I said I wanted to like actually, or I'm anticipating it to go down up until here and maybe give us a reversal somewhere in between, or an order block somewhere, or a value gap, or any respected level that is gonna go up to before actually giving us a move down. So since now we're still on a 4-hour time frame, as we go down to smaller time frames, these 4-hour candlesticks are going to be broken down into even more detail so that we can actually see another trend inside that previous trend. So the reason I'm saying it's gonna give us a downward move, after the market opened on Monday last week, we had a very strong buying pressure, but that buying pressure also wasn't enough to break our previous R, because it actually shows that the overall direction is still, or the bias is still selling momentum, or still selling pressure. So now inside here, inside here we have another trend. Inside there we have another trend. That's why we call them trends in trends. So inside this uptrend we have another uptrend that we're going to be concentrating on when we go down into our smaller time frame. So we're going to go down to our 1 hour time frame, and there's the trend that we're talking about. So this was an uptrend. As you can see, if I use my path, this was an uptrend. But now we came and had a change of character here, signaling a shift in market structure, meaning that the uptrend that we were on, it's actually like, or the retracement move that we were on, it's actually like done. So now we have to be looking at selling pressure once again. So it broke below and still giving us moves in the downward direction. So now what I'm gonna be analyzing here, we have our change in character. Yeah, change of character. There we have a change of character. That still remains our high because it's the highest point on this retracement move. And here we have our low. We're actually waiting or anticipating the market to break this low. Here we have our low. Here we have our low. We're actually anticipating the market to break our low. We're keeping it as simple as possible, because you'll find that many people, when they analyze, they have a lot of things, like unnecessary things that they analyze. As long as you know the psychology behind why what's happened, like I don't see the reason for you like to make your chart dirty with all the tools and drawings, because if you know, you know. So if you're someone who knows, or okay, now I'm on an uptrend, I can see it broke up. Okay, like for example, if I know, I see that I was on an uptrend here, I'm not gonna use this uptrend anymore. It's previous data. It's helping me, yes, to identify where the market is gonna go next, but I'm only gonna highlight like the most important points. Like there's no use in me now coming here and identifying or showing that this was a break of structure, this was an R, this was a break of structure, this was now an R. Okay, yes, this one, previous data, change of character, understandable. But what I'm saying is that there's no need for me to like make my chart dirty with a lot of previous data that I'm not actually gonna use anymore. It's better if I concentrate on what I'm going to use. Like if the chart is clear and it's clean, it's better for you like to can understand. You're not actually confusing yourself with a lot of unnecessary tools and drawings. So now what I'm actually anticipating is the market to break below this level or below that low, come back up to either this level or that level, or wherever I'm gonna see a significant sign or signal that okay, the market is gonna actually reverse here. That's why I'm gonna enter my trades. So now what I'm anticipating is something like this. It's something like that. So now if it breaks below there, obviously this is gonna be my R, but only if it breaks below. If it doesn't break below, I was wrong. If it breaks below, that's gonna be my R, and then I'm gonna be waiting for the market to come to a significant level where I'm gonna go down to a smaller time frame to actually like see or look for entry opportunities. So we already have a conclusion. So before the market does what I just said it's like it must do, we're not gonna be entering any position. Or again, the market might not break below and actually break up above. If it breaks up above with just a wick or a tail, we're not going to be entering. But if it breaks above and actually closes above, we're going to be waiting for the market to come back inside, either to this level or to a level maybe down here, to actually give us or to a significant level that it's going to create to give us entry opportunities to actually go further up. So now but the high probability one for me, the high probability one, it's a sell. It's selling momentum, it's selling pressure. The high probability one for me, it's selling pressure. So I'm just gonna do this, put R here so that I don't forget that for me what I'm actually like looking for or anticipating on the most is a sell. So the R, I put it on yellow just to show that it's not confirmed yet. I'm waiting for the market to break below my low and actually like go further down. If it goes further down, I'm waiting for it, or I'm anticipating it to actually come down to a point where it breaks like this below this one and come and retest anywhere here and actually give us the move to the downside. Because overall, looking at the higher time frame, we saw that we are still on a downward move and we still have a lot of room for the market to trade further down, trade further down. So I'm only gonna be going down to a smaller time frame when I see what I was anticipating happen. That's when I'm only gonna go further down to find my entry opportunities. I hope this helps. This was analysis for this coming week on GBPUSD.